It's 6 o'clock in London. It's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world today. And a very happy new year to you all, ladies and gentlemen. My name is Patrick L. Young. The IPO-VID live stream, Series 15, Episode 5. That makes for Episode 89 starts here. Exciting news today from the London Metals Exchange in the wake of LME Chairman Gay Huey Evans standing down last week. The Oliver Wyman report on the nickel nightmare has been published. More about that in tomorrow's Exchange Invest newsletter. Are you a subscriber? Meanwhile, over in Germany, BaFin, rather seismic stuff for all those of you who, like me, may have spent the Christmas holidays watching financial videos and documentaries. I have to say, Madoff is absolutely gripping stuff if you get a chance to see it on Netflix. But anyway, that FT documentary about Wirecard puts BaFin in mind. BaFin seem to be flexing their muscle after the embarrassment of the Wirecard debacle. They've been telling Eurex and Clearstream to clean up organizational deficiencies. Meanwhile, in the court news, since we saw you last, Sam Bankman-Fried has, of course, been extradited from the Bahamas to the USA on his own recognizance and released on bail of $250 million. My hikes, the inflation in this world has been seismic during 2022. Just a year ago, $250 million was enough money to supposedly settle his entire New World Central Counterparty Clearing System. By the end of the year, it was just enough to get one bloke with curious hair bail in the state of California from the Southern District of New York. Anyway, SBF says he's not guilty, which I suppose is in line with his mother's exciting treatises of guilt and or the lack of it. So that probably is no surprise that he's decided that he's going to say he's pleading not guilty to anything the US state has sought to accuse him of, as was the case in his hearing on January the 3rd. Let's get on with the show today, and we have a gripping show. Our guest today is Simon O'Brien. Our topic is ADGM, Abu Dhabi Global Market, building an island of excellence. Why do we refer to the island of excellence? Well, of course, that dates back to a headline from an opinion piece that I wrote, which was published a year or two back in the National in Abu Dhabi, where I was talking about the arrival of IFAD, the ICE Futures Abu Dhabi, which took only 504 days to be built. And at that point in time, I talked about the island of excellence emerging around Mirban Futures in this case, but it's much more beside. Simon O'Brien leads the markets department, which is responsible for the authorization and supervision of market infrastructures at the FSRA, I should say, of ADGM. Simon has led key projects, including the development of ADGM's virtual asset regulatory framework, its Spot Commodities environmental instruments framework, and its remote member framework for ADGM exchanges and clearinghouses. Simon's a member of the FSRA's Management, Authorization and Policy Committees and is a member of IOSCO Committee 2 on Secondary Markets. Prior to joining the FSRA of ADGM, Simon has worked at ASX on two separate occasions, I hasten to add. He was the head of listings at NASDAQ Dubai in the next emirate across, head of supervision at the Sydney Stock Exchange, as well as leading the primary markets team at the DFSA, which is, of course, the Dubai Financial Supervision Authority. Simon, greetings and welcome to IPO-VID. It's lovely to see you today on screen. Let me ask you, where in the world are you today, Simon?
Patrick, it's great to be here. Greetings, everybody. I'm in Abu Dhabi, just past 10 o'clock at night. Not as lovely weather as you, Patrick, but it's lovely here all the same. The building behind me gives a bit of a view of the island on ADGM, and I'm sure we'll explore a bit of that today.
We're going to get to the island in just a moment. That's really, really interesting to talk about it in its whole, not just the topography, but everything that's going on there in a regulatory and market standpoint, a unique financial center that's pulsating with growth in the Gulf, in the UAE. But let me ask you, I mean, how did you actually get into finance? I mean, first of all, I think a lot of our viewers will get a hint of an accent there, and I don't think it's from the UAE.
No, it's not from the UAE, and different to my surname, it's not from Ireland either, Patrick, to disappoint you. It is from Australia. Most of my career has been in the exchange world, sort of doubled on both sides of the fence, as you could say, in the regulatory side and also the operational side of the exchanges. To get into finance, it really started in Edinburgh many years ago on the bond side of things, buying and selling bonds, and have gone from there into financial infrastructures and markets and things like that as well. And it's led me all the way here to Abu Dhabi, where we are trying to apply what many of us have learned from around the world and build it here in ADGM and also within the Middle East and North African region. So my accent is a bit different.
Certainly a different accent. One of the many O'Briens and folk of Irish origin who found their way to Australia over the course of the couple hundred years of the Commonwealth there, and quite incredible. Let me just say, actually, hello and break off. Say hello, Marcus Ward. A happy new year to everybody, says Marcus. A very, very happy new year to you too, Marcus. It's lovely to see you tuning into our first show of the year. So, okay. Therefore, I'm going to presume that you got your first break in finance in Sydney and Australia. Is that right?
Well, Sydney, indeed. And from there, stayed there for a few years, Sydney, Melbourne, Edinburgh, Brisbane, Sydney, Dubai, Abu Dhabi. And Abu Dhabi now for seven years.
Abu Dhabi for 7 years. That's quite incredible. So, I mean, that's quite an achievement because, I mean, talk us through this incredible island in Abu Dhabi. You've been there really since pretty much day one, or in fact, possibly day -1, as it were, before it was even open.
Yeah, it was day -1, and we started building this really back in 2013. And to be honest, a lot of it was being built, and many people might be aware of the DFSA and the structure that's occurred at the cabinet and federal level here to allow for financial free zones. So what they've done is allow each of the Emirates, if they decided to do so, there's 7 Emirates within the UAE, to design a financial free zone. The best way to explain that for those from Europe and the UK is imagine Canary Wharf is carved off as its own jurisdiction with its own laws and requirements, its own court, its own common law courts where we can have judges opine on various cases and others 24 hours a day, a full digital court in that sense as well. 7 years in the making, and we've learned an awful lot through that time and still many more things to learn. But it was the ability to come here and work on something new, as you've touched on in terms of some of the policy legislative amendments as well. But that sense, it's really, really good. We have something like 20 members within ADGM from 20 different jurisdictions. So we think quite globally in that sense and learn a lot. Just to what I know we touched on, I'm from Australia, but we don't spend time saying this is how we do it in Australia or this is how we do it in the UK or the US or others. We do try to work through what is best and what is most applicable and what is most relevant to designing those markets. And that's the exciting thing. I suppose that's why I'm still here after 7 years, is we've still got so much more to build.
Well, certainly it's very interesting. I mean, you came along with AD a few years after the Dubai folks built DIFC. And I noticed recently, I think DIFC was announcing the fact that it had reached something like 5% of the GDP of Dubai, which is a pretty stunning number, actually, to go from a standing start in barely a generation. You mentioned a couple of things I want to unpack there. I mean, first one was you talk about your separate legal and court system. I think that's something that's very interesting to look at. And in fact, for those who've been watching regularly on IPO-VID, you may remember that we had Barney Reynolds on talking about this very system a year or so ago from Shearman and Sterling. So explain to us, your jurisdiction completely is unique to the ADGM.
Correct, yes. And Shearman's and Sterling did play a key part in the design of the framework. There's no doubt Barney and team have been close to ADGM, I suspect and imagine close to another jurisdictions within the region as well. We're a little bit different, first of all, as we're an island. So when you cross the bridge physically over the island off the main island of Abu Dhabi and come onto the island of Al Maria Island, somewhere over that bridge you cross into our jurisdiction. And by jurisdiction, it's the application or disapplication of various commercial laws and requirements. So the onshore laws and requirements around how you construct a business, what type of rules and regulations they're going to comply with, the legal framework around that is all disapplied. And then what we did was apply on an evergreen basis the legislative framework, particularly of the UK. So we're one of a couple of jurisdictions, the DFSA is another, where common law is applied. The legal legislative framework of the UK is applied, and that's particularly relevant to our judges who can then follow precedent as established in the UK and other common law jurisdictions. The difference then as well, even further, which is we can self-legislate as a regulatory body on the requirements around what a broker would do, what the general conduct requirements are, fees, prudential requirements, etc. as well, all within the prism of that UK, similar to UK legislative environment as well. The DFSA, yes, is an island in a legislative sense, but is also, you wouldn't know when you cross from one street to another in Abu Dhabi. You definitely do know when you cross the island into our island. It is a distinctly different jurisdiction, whether it's a bakery, a broker, a bookshop, it all sits within that regime, which keeps it interesting, and also is highly flexible and also gives certainty around that. If you go then to, I know many people on the call might look at a derivatives regime and others as well. The ISDA requirements, the netting requirements were built in from day one as well. So we've learned a lot of what the other jurisdictions have done and have built that in over not just on launch, but also since then and looking forward as well. That's keeping our policy and legal teams and obviously the environment and the firms within the island very engaged on what is next and what's best to apply. Of course, it can't just be legislating. We will then tire out our firms and have sort of regulatory overburden. We've got to do it prudently and properly at the same time as well, but we're still building it out.
That's quite fascinating. I mean, there's a lot there. I must say, one of the things that really does strike me is the physicality of the Almeria Island, because, as you say, well, it's reminiscent of the City of London, isn't it? I mean, the Corporation of London, the body that controls the City of London square mile, still owns the bridges that connect South London to the city. And the idea there having been that, well, from 1,000 odd years ago, there was this danger that London might be invaded. So therefore, the Corporation of London had within its purview the opportunity to actually destroy the bridges. Now, I appreciate nobody's talking about any form of pugilistic contest in the UAE, but it's a very, very interesting psychological point that as you go across that bridge in your Kareem or whatever, as you're driving, you get there and you are suddenly in this English language or essentially English common law environment, which makes such a difference. And I mean, it must have been fascinating because when you first got there, you mentioned Canary Wharf. I mean, there's been an incredible amount of actual physical development to create that island in the course of the last 7 or 8 years in just the built space.
Absolutely, and it's a reflection of the development not just of ADGM but also Abu Dhabi, the UAE in general as well. And you touched on the fact of, you know, Dubai with the efforts of the DFSA is to reflect and develop and show what the financial services as a sector are bringing to the economy there and within the UAE as well. And ADGM is a reflection of that to a really great extent as well. And I think that the really interesting part is, having worked on the island, and for those that have visited, we have some of the best restaurants and bars and places to go and have a coffee within the UAE as well. So it's not just about a place to go and do work. There are people that will live on the island, that will shop on the island, will go and watch a movie, go to dinner on the island as well. You've got some of the great hospitals. You've got Cleveland Clinic, Abu Dhabi, and others on the island as well. Some very good hotels on the island. It really is, if you look at their vision of what they're building and what we're building there, not just for this decade, but for the decades going forward as well. It's a really important part of the island. I mean, we've got a number of bridges connecting there. One of the bridges from here, maybe one day will connect onto Saadiyat Island. People maybe heard the Louvre and what they're building in terms of the galleries and museums there as well. I suppose in that sense, that's the museum and cultural island. We are the financial services island, and it's really exciting to see it grow. I won't be sad to see it though in the years to come, and remember those days when you could arrive on the island and get off it in 10 minutes. I expect the traffic and things like that will get more congested in time, but that will just be, I suppose, a reflection of things that are growing. But we do track headcount, assets under management, the building infrastructure as well. The exciting part of it is, I don't know the actual numbers, but I think our occupancy rates at the moment on the island there's not much room left, and we've always got to look at how we actually build that further infrastructure in there. And you've got parties like Al Dar, Mubadala, household names, at least in the Middle East, are looking at that in terms of the master development plan of the island. It's really exciting, and it is a fascinating and great place to work on.
It is. It's a very, very dynamic and wonderful environment, and certainly I find it absolutely sensational to go visit. It's really so interesting, a pulsating, as you say, a city within the emirate, within the city itself. And of course, you have so many facilities within Abu Dhabi. I mean, yes, if you're on the right corner of the island, you can actually look across to the Louvre on its own island, which is a magnificent art gallery and a magnificent piece of architecture in its own right. And of course, for petrol heads like me, there's nothing better than the fact that you're only, well, depending on the traffic, of course, half an hour's drive or so from a world-class motor racing circuit as well, which isn't quite on your island, but is on the mainland, which is something else that demonstrates the incredible ability of Abu Dhabi to have expanded in the course of recent years, and also a cracking international airport, which with Etihad is connecting you to the world. So those are all fantastic points in terms of the infrastructure. You've got this base of common law. And I think, once again, ladies and gentlemen, if you want to talk about common law, go back to the IPO-VID that we did do with Barney Reynolds of Shearman and Sterling. He's an expert in all of these sorts of things, and actually was involved in helping to write the legal canon for the ADGM. Talk to me a bit about the work you've been doing, Simon, because it's an incredible amount of work. We'll get to the very recent stuff. But I mean, essentially, what's it like coming into a financial center on day -1, and you've got to create, essentially, you've got this common law base, you've got to create a rule book for everything.
It's been a really satisfying 7 years, a challenging 7 years. And what I really need to acknowledge is the work of a number of people, both inside the FSRA, inside the markets team, the other teams as well as the legal fraternity and the other stakeholders as well. And there's a balance to it, because you touched on the start, we're a member of IOSCO and others as well. So we can't go off and design things out right on the edge of the regulatory regime. It looks great for everyone to come and do stuff, but doesn't actually meet and ensure equivalence as well. But there are areas we've had to look at and build out. And if we go through strategically over the last few years, when we designed the Abu Dhabi and what we were trying to do, we were really hitting the nail on the head on those key areas of Abu Dhabi's strength. To those who may not be aware, a great source of sovereign wealth, a great source of assets, wealth management, private equity, and others as well. They're all things that are taken as a given. And I suppose in my area, the markets areas, how do we build a market infrastructure in addition to that, to allow for not just the products to be created and sold off to investors and protected as a regulatory regime, is what else can they do? Now, we had a couple of options there. We either build it and they will come model, or we let the markets come to us. So I suppose our requirement is we don't build it, but we give the frameworks for the firms to come in. I'm sure we'll touch on some of them later through the show. But that's been really interesting then. So we designed the framework to allow for members and brokers to connect to the exchanges that would exist in ADGM. We've looked at our securities rules over time. We've looked at our derivatives rules, obviously commodity derivatives frameworks from that context as well. We've built in for those across the world. We've looked at the parlance of what we've got: MTFs, OTFs, exchanges, clearinghouses, and others as well. Many of the people on the call, this discussion today, will be aware of that, but they're quite novel concepts within the UAE and the MENA region, and we had to put those in place as well. That's on the activity side. The other side is the products itself. So obviously Abu Dhabi is seen as a key player within the commodity space, and is looking at other areas as well, combining that with the security space and others as well. So the hardest thing, though, is not designing that at an ivory tower. So what we've done is recruit people from all around the world. We've engaged with consultants and others as well, but a lot of it has come from our IP to design a framework to allow for firms to come in. The really, really good part is we're 7 years into building it, but we think the building's still to come. And that's what's really exciting. Regulators, by their nature, will build something and try to protect what's already there. We will do that, but also try to give the options and the framework for our firms to continue to grow their product line and provide those services, not just here in ADGM, UAE, but potentially globally as well. That's what's keeping us very excited, and I'm sure we'll touch on that in a second, Patrick.
So that's a really interesting point, actually. Let me just break off at one moment, Simon. We're here with Simon O'Brien discussing the Island of Excellence, which is the ADGM, the Abu Dhabi Global Market. Hello, Les Calvert. He's wishing us all a very happy new year. Thank you very much, Les. Delightful to see you, and a very happy, peaceful and prosperous new year to you and yours as well. And also, by the way, ladies and gentlemen, while you're watching this show, don't forget to give us a little bit of love, please. We appreciate likes, comments, questions, but particularly those likes, because in the world of AI rating of the popularity of shows, the more you like us, the more that we go up through the search engines. And the more we go up through the search engines, the more people get the opportunity to learn and hear these great messages about positive finance, such as we're hearing today from the ADGM. Now, you touched, Simon, on that whole point about you've built the rules over time, but you're very flexible as a regulator. Just recently having created the base of, and you had this lexicon of all the different acronyms of MTFs and different kinds of platforms and so on. You produced a lot of stuff in the course of the last year, which I think was very, very exciting. And it was a toe into the digital asset sphere and much more besides. Maybe you could walk us through what you've been working on just in the course of the last few months and you brought to fruition in Q4 of last year.
Yeah, no, I'm very happy to do so. And I think the thing that's been interesting with that is, though those efforts have seen the day of light, or no, if that's the right term, only in the last few months, the work on that has taken quite some time. Now, what we've tried to do is build out, in our minds, a revamp, even not a revamp, an additional set of requirements around our market infrastructure rules and our markets rules. And that's really to allow for the firms, some of the firms we have in our centre. So we have people like ICE Futures Abu Dhabi. We have EC, who's running, as you've touched on, the world's first Merban crude futures market. We have Air Carbon that is launching very shortly. I know, I think you had Tom and Bill on on this very same session sometime last year as well. That's to trade environmental instruments as commodity instruments. And let's just touch on that for a second. We've looked at many parts of the regulatory infrastructure around the world and looked at and thought about what other pieces of that infrastructure need to be, in our views, at least have a regulatory framework for those. And one of those is in that commodity space, is in that environmental instrument space. Now, we're very aware of a number of jurisdictions have gone down the path of establishing cap and trade markets, have looked at voluntary carbon markets as well. But in that space, we've come out with a regulatory regime to bring in a new financial instrument called environmental instruments. And those environmental instruments can operate in one of three ways. The first one is a cap and trade scheme, but we're not going to be the body that will design the cap and trade scheme, but at least the regulatory authorities in our part of the world know we could have those operating here, and I'm sure other parts of the UAE and others are putting their hands up for that as well. The second one is the voluntary carbon market, and that's the most important one. Air Carbon will be the first to provide a regulated exchange and clearinghouse to provide both spot markets in those products, which is very interesting, but as well as derivative markets as well. And then we have rights and entitlements for that as well. If I take one step back, which I think is what you're wanting to really look at, is then what else outside of those instruments that we can put in place, needing some regulatory certainty within ADGM to allow participants to trade in those markets. And that covers everything from benchmarks to the use of price reporting agencies to various requirements around position limits and other requirements around the use of derivatives. Really, really importantly, we've looked at the security space and allowing for the development of securities markets to look at things like preference shares, various ways of raising capital. Importantly, with my background, Australian background, looking at bringing in the requirements for mining and petroleum explorers and producers as well. For too long, we saw the firms from within the MENA region going to Sydney or London or Johannesburg or Canada, and we really felt it was time that there was a framework at least that could facilitate the offering and listing of securities for those as well. We also looked at some changes to the virtual asset space, but we'd had some guidance and rules put out a couple of years ago around the regulation of virtual asset MTF or custodian, the concept of digital securities, whether they could also be regulated and traded as well. And we use sometimes the guidance that we published just recently, but the guidance to allow the firms who are already operating in ADGM or have got a bit of their thinking around what they're going to be looking to do in 12 months, 2 years, 3 years from down the track, to say, look, we might start off in a virtual asset space, we might be in digital securities, but then we're going to use the same technologies to trade environmental instruments, spot commodities, or other products as well. That's what we're really looking to build out. And these recent regulatory consultations were key. The key bit to add finally on that was we got a lot of good feedback from that. So often, and sometimes, when we publish a consultation paper, we really don't get a lot of feedback. These ones are different, where the market is responding in some ways in great detail around areas of interest to them and saying to us and trying to future-proof the framework to say, we would like to operate in ADGM, or for those others who might want to operate in ADGM, have you thought of this? We think you should put this in place. And that feedback, that circuit of getting feedback constantly from the firms, both in the centre and coming to us, we think has made ADGM an even stronger jurisdiction than we could have hoped for.
It's very interesting. I mean, I want to go back and unpack a few of those items in a second. Just moving to one side, one of the things you've been looking at in particular was remote membership, if I remember correctly, of ADGM. And I think that's a very key facet to trying to build a financial center quickly, because you can't necessarily guarantee that you're going to have every single element sitting in your financial center, particularly not on day one or in the first few years of operation.
Absolutely key. And I think I'll let ICE Futures Abu Dhabi give its own view on that as well. But even in those early days of discussing their application process for us, they were concerned, and rightly concerned, as to whether this is going to be a regulatory roadblock for them. No, what it's really done in that way is allowed us to work with a number of key jurisdictions, for example, for them, around Switzerland, the UK, US, and others as well, to allow those broker-dealer member firms who have a client base that want to trade in product in ADGM to stay on the basis of equivalence between us and the CFTC or the FCA or the Hong Kong SFC and other FINMA in Switzerland, and allowing those firms to bring in liquidity into the market as well. We're one of the only few jurisdictions that can do that within the MENA region. And that's really, really important. It's not just about everything coming into the centre. It's allowing some firms who anchor, for example, an exchange in ADGM to have members based on the same principles that regulators look for around consumer protection, the right set of controls around market abuse, the ability of our enforcement teams or investigative teams to go and engage with those regulators and get information as well. That's been really successful, and we'll broaden that in time. As we engage with our exchanges, they will be talking to jurisdictions and regulators and other participants within the region, and more widely to say we would like to connect those markets in. But ultimately, it's about equivalence on there. Some regulators will talk about deferral or equivalence, and others as well. And you're spot on. If we didn't have that, it would have required every firm, every participant to be in ADGM from day one, and that's just not feasible. We're just never going to work from a cost sense, a compliance sense, and others as well. And if we can defer and recognise and work with other regulators to allow IFAD and others to offer their services in their jurisdiction and the brokers to come in ours, we believe that is a very strong win-win for everybody.
Yeah, it's a very good example. For example, 25 years ago, when regulation was a lot less onerous across exchanges, markets, brokers, and so on. But I can well remember, and you probably do too, I mean, a lot of the early stage Southeast Asian futures markets and commodities markets having some difficulty actually bringing brokers in because they didn't really get the remote membership context in the same way. And that obviously slowed down their development, which I think is very important. Now, you've mentioned this, I've mentioned it before, but I think it's a great opportunity to talk a little bit about IFAD, ICE Futures Abu Dhabi, not about their own business. They can do that themselves. In fact, Jamal, the original president of that business, made a brief appearance a year ago, last March, on our Tribune Bland interview segment. But very, very interesting, I think, looking at this from the high level. I talked about it in the national because I was just blown away with what took place. Correct me if I'm wrong, but ICE were able, with ADGM as clearly an active cooperating regulator and helping them through the correct framework process, to build a marketplace which was operative in 504 days, and at least, what, 200 or 300 of those took place during COVID.
Yeah, it was a very good project to see a group like ICE execute, and the timing that was given to it as well. And you touched on ICE's engagement with us as the home regulator of ICE Futures Abu Dhabi, but there was also engagement with other regulators as well, and other aspects of that, including ICE Clear Europe. So through that COVID and the COVID times and other aspects of what was occurring in those markets at that time, we also had to work with ICE Clear Europe to get the approvals from the Bank of England and the FCA, the approvals from the CFTC and other key regulators as well, to establish a new physically settled derivative product, which is not the most common type of product to be established, in addition to the other 18 or 19 other cash settled products as well. And also, without going into too much detail, was the movement of Abu Dhabi and ADNOC and the National Oil Company as well, and I'll let them talk to those processes, but also changing the official selling price structures, moving to a pricing process, a forward pricing process by way of the ICE derivatives market there as well, and bringing in the other 9 other shareholders that were brought in addition to ICE and ADNOC as well. So many moving pieces, and wasn't a project that I've been involved on or something similar before. We've all worked on new markets, but in terms of that context and those requirements, yes, I'll leave it for you, Patrick, to really push that point. But IFAD getting that away and us and the other regulators getting those approvals away in that time, I think it was a credit to everybody involved. A lot of work, and really since then, a lot of normality of process to see the exchange getting up and running. It's lifting over time. It's every, it's daily volume, it's open interest and others as well. I'll let them talk to that. And it was important in that sense for the other regulators we're engaged with to see that this market would operate to a level that they would expect to see their own markets operate. I think to everybody involved, it was very, very well done.
Well, look, I mean, you're absolutely right. I totally applaud what ADGM did, and you're quite correct as well. I mean, not within your direct wheelhouse, but the operations of many other aspects of Abu Dhabi, the Emirate, and particularly ADNOC, in the way that they effectively changed the way that the Murban benchmark was traded in order to allow it to be opened up to a futures market was quite incredible, bringing in the investors and your ability to cooperate with so many regulators around the world. It was absolutely sensational. And the remote membership has clearly paid off in terms of the volume there, because we all can remember quite easily that when Brent crude was first launched on a relatively unsuspecting world 40 years ago, I mean, it was doing a couple of hundred contracts a day. And actually from day one, we've seen high hundreds into the thousands from Murban. It's done remarkably well, and it's still nowhere near finished the 18 to 24 month period, which is usually the infancy of these sorts of new exchanges and contracts before you expect truly maturity to come in and a lot of other broader participants. An amazing achievement for ADGM. I applaud you on that. Let's look then. You mentioned them earlier, Air Carbon. You're quite correct. William Pazos and also actually Tom McMahon have both been on this show separately in recent months. They're great ones to watch as well. Now, Air Carbon, they came to you with something really quite different. And if I remember correctly, where ICE are using their clearinghouse in Europe, actually Air Carbon are building their clearinghouse in Abu Dhabi, or at least a part of it. Is that right?
Yeah, that's correct. They're establishing their clearinghouse in ADGM for on launch for their spot markets, and further to our regulatory approvals to come to commence for derivatives in due course.
It's a very, very interesting move, and certainly it's going to be very exciting to see that happening in the near future. Also quite intriguing, I mean, you talked about a lot of the product sets, and I think one of the things that is very interesting is you yourself mentioned it is interesting that so much of the world's oil and gas comes from the Middle East, and yet so much of the world's listed companies in oil and gas are listed pretty much anywhere but the Middle East. I mean, there have obviously been some exceptions in recent years with Aramco listing on Tadawul in Saudi Arabia and so on. But nonetheless, it's a fascinating pulsating opportunity for ADGM if you can manage to even get a fraction of the extraction mineral energy business that could possibly go to the Middle East compared to what's been traditionally going to, as you say, Canada, South Africa, and indeed London in particular.
I think that's right. And I think that's part of the, if you talk to my colleagues in the strategy area of ADGM and what Abu Dhabi is trying to do, there's no doubt Abu Dhabi is a commodities hub, as is many parts of the UAE as well. And I think we think there needs to be some sort of real push into that area around how that can be pushed into the financial services aspect. So if you bring together a jurisdiction that can house IOSCO Abu Dhabi with its Murban crude and related products, Air Carbon with its environmental instruments, voluntary carbon market and derivatives going forward, that's such a strong base to build from as a jurisdiction. And then on the security side, we believe is the same thing. So that's exactly why we developed specific offering and listing rules that do not exist, in our view at least, anywhere else within the Middle East, to allow for those firms to report against, whether it's the JORC code from Australia, NI 43101 from Canada, the SAMREC code, or other codes as well as part of what's called a CRISCO umbrella of reporting codes. We've done that, and because of our connections into other parts of the world and other jurisdictions in that sense as well, it's bringing in that nexus of firms to say, well, maybe that's where we go and raise capital going forward, or at least do an offer of securities in that jurisdiction. Not to say the bit I haven't touched on is of course what they call SPE PRMS, which is the petroleum reporting codes as well. So anything from a hard mineral, use an example, a Botswana diamond explorer, to a petroleum producer, there is a nexus now of the infrastructures in ADGM. Haven't yet seen the securities markets move into that space as well. But us as regulator, getting to the points we touched on before, Patrick, we've now given all the interested parties effectively the playbook by which they can determine how to do or what to do or whether they would like to do it. The really, really interesting part for where I sit in ADGM is we're similar to the UK in a sense as well, where the listing authority, if you call it that, sits within the FSRA. So we've had to not just put out a framework from the offering side, but also the listing eligibility side as well. And the real push for that, the real thing we can think unlock some of that is around the secondary capital raising rules as well. That aspect of a commodities hub is key. The final bit, which we touched on earlier, is the commodities regime in the first place. Maybe what's not aware or what's not obvious to most of the people on the call is we have now dipped our toe into the framework of spot trading of commodities as well. So whether it is precious metals, sorghum, something else that you call a commodity, will allow only certain commodities in as well. But that matched with, as you say, listing eligibility rules for mining and petroleum companies, commodity derivatives, carbon, environmental instruments, and spot commodities altogether, we think we have a very clear set of regulatory requirements for those who would like to participate in the jurisdiction. We just can't, we're just the regulator. We just have to wait to see who would like to participate. But we think that is certainly coming. And it's going to keep us busy, we think, for years to come.
Certainly, it sounds to me as if you deserve to be busy for years to come, because there's so many things going on and so many possibilities for people to manage to move forward. It's interesting, as you mentioned there, about the listing authority. So that sits within your own auspices. Just to give a quick breakdown to that, is your listing authority therefore working on a basis of everything that's listed you have to look at, or do you have particular carve-outs? I'm thinking here in terms of the way that, for example, in Europe, you've got prospectuses only have to be written if you're raising, say, more than 8 or 10 million, something like that. I'm just curious, or do you look at everything that's coming forward onto the marketplace for a listing?
So anything admitted to trading on a recognised investment exchange or needs to be admitted to the official list of securities, yes, we would look at that. But I'm going to change tactic on that slightly, because one thing I haven't touched on, Patrick, and I think we've touched about this before, is the year before we even went into that space between the private markets and the securities markets. And maybe that's the best way to explain where we think there needs to be some work being done on that. If you look at private markets, traditionally they're exempt offers. So as you say, a certain size only, no retail or very limited retail at certain legs or denominations, or only going to certain different clients or for certain purposes, or all the way down the very end of you must do a full prospectus offer. Now, what we did going back about 18 months ago is we really wanted to push that bridge between what an MTF can do all the way to an exchange, and allow for example, an MTF that normally in our jurisdiction would only have exempt persons or professional clients participating in an offer and trading in those securities. We're now allowing for up to 200 retail clients to also participate in such markets as well. Now, that 200 is a key number. Some jurisdictions, like my own back in Australia a number of years ago, you could see offers and listings are all the way as low as 400. Some other jurisdictions around the world, 500, and others as well. So we don't want to dilute the primacy of the prospectus offer and listing on a recognised investment exchange, but we don't also want to keep that clear delineation between an exempt offer and what an MTF can do. We wanted to give a bridge there as well. Now, what that means is an exchange in our jurisdiction can run multiple markets. So it could run a full prospectus offer, full retail type market. It could run an exempt offer for, a professional client offer, professional client only market for certain derivatives markets, and maybe somewhere in the middle as well could establish an MTF over time with some retail. Now, that's a really key aspect, because without that, we think the bridge or the requirement to capitalize a full clearinghouse and have full settlement obligations, full disclosure obligations for your issuers is a really big step to go through. When you remember, in our context, we're still building a new market. We don't have that national champion exchange. We don't have that legacy or monopoly type player that can build those things out. We have to be a little bit more agile. And so in that sense, we're seeing firms are coming saying, we want to establish a private market first. We want to move into professional client market with some retail. And then we want to move into a clearly delineated full securities market in due course as well. They have all options available to them. So I haven't quite answered your question in detail in terms of the general exemptions, except to say we've actually fudged the middle a little bit more by saying here is a bit of a path for firms to migrate up the scale from fully private markets to RIEs, and we're really excited about it. That aspect.
I think that's a great answer, actually, because it really does give us a very good example of how well you've been thinking through the whole policy and approach that you've got in ADGM to creating value, and therefore being able to build up a series of different marketplaces, whether they're in spot commodities, in futures and derivatives, commodities or otherwise across the board, and also digital assets, which I think we'll get to in just a moment. But actually, I'm going to change gears slightly, because I'd like to go to a question we've got from Michael Smith. And Michael has asked us an interesting question. Well, first of all, he says, I was there for the Abu Dhabi Grand Prix last November. Fantastic place. Totally agree, Michael. I've stayed at that hotel, not on the Grand Prix weekend, but I have to say, as a petrol head, there's always something delightful to be seen about sitting there when you've got the opportunity to open the curtains and have racing cars go by your hotel window. The real question, though, says Michael Smith, is the ADGM looking for local, i.e. Abu Dhabi companies for listing, for promoting, etc., or is it looking for non-Abu Dhabi located entities that are looking for the promotional and operational regulation that ADGM is offering?
Michael, it's a really good question, and I might rephrase the response a little bit different from what's the FSRA trying to facilitate rather than what ADGM, which is the jurisdiction's trying to do. But your question's a really key one, and we think this is something that it's going to require some work, and we think we've got the framework in place. But the answer is we're looking to do both. In many ways, what has happened historically, certainly within parts of the Middle East markets, is they've either been very domestically focused, or they'll establish an offshoot that's almost entirely internationally focused. And we think there needs to be a little bit of convergence of the both. So whether it's to allow for certain trading hours, even market order types, how you settle a transaction, and ultimately or clear before you settle a transaction. And then the issuer type it's different. So you'll have some entities in ADGM that will like to make an offer in ADGM, but also potentially in other markets. And there might be some firms, my home jurisdiction in Australia or around the world, that might want to make an offer into a number of jurisdictions. They might only want to make an offer into ADGM and still list somewhere else as well. We want to make sure that our framework is part of that solution rather than driving it one way or the other as well. And that's the type of conversations we're having with exchanges, both regionally and globally as well. If I take our regulatory hat off and put my own personal hat on, I think it's going to be best if we do match both. So I think capital markets work well, or issuers get to choose where they want to raise capital because there might be a certain nexus or a view. Hopefully one day ADGM is seen, for example, as that jurisdiction in the Middle East where companies will raise capital for mining, exploration and petroleum for the same. That then may lock us into other jurisdictions like South Africa and others, and allowing those issuers to raise capital in multiple jurisdictions. We think that's the key.
I think that's a great answer. Michael, thank you very much for your question. I hope that satiated your thirst for knowledge. It's certainly a very, very pulsating and interesting thing. So we've got just about 10, 15 minutes left. I'd like to move towards that whole digital asset arena. I mean, it's been much talked about for the course of the last couple of years. You brought out a set of rules in the course of the last quarter of last year. And obviously, I can see that that's a jigsaw piece that you're trying to fit around the holistic ADGM and FSRA viewpoint of the world. What's the approach that's unique in Abu Dhabi?
It's an approach that's been in place since really end of 2017 and 2018. And I give you one aspect of the approach, or a couple of aspects of the approach that was key and we think is still holding place today. When we benchmarked and consulted, and regulators by their nature like to benchmark other jurisdictions before they put in place a new framework. It was very difficult to do that in 2018. So many of the concepts that many of us on this discussion today take for granted, things like settlement process and segregation of client assets and the proper controls around market abuse, we just weren't there. And we started to feel like, well, someone in some way, if we're going to regulate the space, need to put those controls in place. So we were not seen and have never been seen as a jurisdiction for everybody in that sense as well. We require, and it's credit to our firms that have both come through and coming through now as well, we spent a lot of time without getting to what we've seen over the last, particularly few months. Our firms have to comply with everything from custody requirements to settlement requirements. Every trade on every market comes through now. So my market surveillance team now is watching every trade. IFAD's still open, I think, at least for a little bit more. Other markets are open as well. We can see that. So what's different is breaking down those risks. So we spoke about them in 5 areas: consumer protection, custody, technology governance. So things from the flow of an asset in and out to finally the market requirements as well. If you've seen what's happened in the 4 years since, many of the things that we think have bedeviled the industry are the very things we put in place. What's really interesting is many of the things we put in place were the things the industry told us even 2018 they wanted to see. Now it's really left for the firms to work out where they want to go to. And we've spent a lot of our time as a smaller regulator, but regulator that's worked very closely with the firms to say, if you want to do this, this is how you're going to do it. Patrick, of all the firms we've seen, I think we've allowed probably less than 3% of the firms that have approached us even apply to us. So we spend even time to go through their technology requirements, their vending structures, everything from market surveillance, custody, client onboarding, and others as well. And sorry, I missed AML. Of course, that's a given. I think the thing for us is, after all those years of work, we're starting to see, we believe, the real fruits from those efforts now. We are seeing good quality firms come to us and say, with everything that's going on, we believe ADGM and the way it regulates the firms is the place for us. We're still seeing others that don't want to do that don't want to comply with our market abuse requirements, that don't want to onboard clients appropriately. We're not the jurisdiction for them, and that's fine.
I think that's a very, very interesting point that you make, diversifying with some other financial centers around the world that have been eager to take anybody who'd fill their office space rather than necessarily picking those who were going to offer a qualitative approach to the regulatory framework. And that's certainly something I think that's become vitally important, not just in the digital asset world, but I mean, everything right around the whole business of financial markets. So, I mean, if we look at ADGM as you sit at the moment, you've obviously got a couple of very, very exciting market infrastructures as sort of anchor tenants, if you want to call it that, IFAD and Air Carbon, to name but two. You've got a multiplicity of other banking, payments and related companies coming in. Are there any particular spaces that you're looking at ADGM to try and promote, or is it you as the FSRA can't really comment? I'm just curious where you see things developing in the near future.
So there's some aspects we're involved in, sustainable finance. We have Sustainable Finance Week here in Abu Dhabi in a couple of weeks as well. We're looking at a number of aspects there. From our side on the market infrastructure side of things, what we're really trying to do is allow the firms to choose and give clarity to them as to what they want to do or not do in that sense as well. We have to be adequately resourced to do all those sorts of things, and that is a struggle, I think, for regulators around the world as well. I think the thing we really want to do, and I think ADGM is really filling out its sense of place within the region and place globally as well. And we're seeing more and more of those high quality firms who are saying we either want to anchor our activity or certain activities in ADGM for all the reasons we've discussed today as well. But what I would stress is the journey of bringing on a firm or bringing in a firm to be regulated is really the start of that journey for them as well. And we've got to work very closely with them. So we can't and in no way resting on our laurels, and we're working closely with our business development colleagues, strategy colleagues, the rest of our colleagues across the FSRA as well. But the thing I think that's really pleasing is we still really feel like the journey's only started in terms of what needs to be done and what can be done. Certainly within my area, the market space, we feel like we've only just started that journey. The infrastructures we've got building out, the firms we've got in, and there's other MTFs, they're in the virtual asset space, Mid-Chains, Matrix, and others as well. And all of the firms we've got, they're going through a cycle with us now in terms of what they're looking to do in terms of their product line and range and development as well. That's going to keep, I think, us extremely tired, but extremely energized and engaged on building new things. So in that sense, I'm being somewhat vague, but vague enough to say it's really exciting. Without getting into the nitty-gritty of what we're trying to sell, I'm going to steer clear of that as a regulator.
That's absolutely fine. I totally understand. However, as you know, and we've been discussing building an island of excellence in ADGM this evening with Simon O'Brien. Simon, there's one question we ask everybody on this show before we wrap things up, and I hope that you'll be able to give us a crisp answer that's not too vague, even though allowing for your FSRA hats to be worn. Where do you think the capital market revolution goes next?
It's such a good question, and I've had three different answers in my head, Patrick, but I'm going to choose one in the security space. And I'm going to talk generally around what the MENA region might need to look at in terms of how it develops its markets. And if you think of the construct of the exchanges, the issuers and the brokers, they're very, very focused on the jurisdiction they're in. And I think there's got to be an avenue to grow. And some of you might take this as given in your jurisdiction, but I'm talking of the MENA region. And I think where the capital markets go and probably what we most need within the MENA region is a process where an exchange is seen, and exchanges are seen, the plural, for where they raise capital. So what needs to change maybe in the MENA region is the sell down of a sovereign or large corporate doesn't raise capital again. The secondary market provisions of takeovers and takeover premium and all those sorts of things. That's what I want to see. It's maybe not a revolution. It will be a revolution, though, in the MENA region if we can get that right. And it goes back to the things we touched on before, Patrick. They're the type of rules and processes we're put in place to say to the market, if you're an issuer, if you're a broker, if you're an exchange, and you also believe that the nexus of a capital market and an exchange is a very best form of that, then we believe we have we believe we have the framework for you to go and do that. I think if we look back in 10 years, 20 years time, and the MENA region is a vibrant region where companies, from however small they are, come to the market at 5 million and become a unicorn and raise capital every year, and there are changes to the board and there's a dynamic market nexus that we see in other markets, that will be a revolution for the MENA region, and I think that'll be very, very exciting.
On that note, I have to say that's a super optimistic, revolutionary discussion, and indeed how exciting it would be to have the MENA region truly have a capital markets champion like that in Abu Dhabi, which could help all of the nations around and about in the MENA, including the many which have not yet reached the esteemed levels of prosperity of the United Arab Emirates themselves. Coming live to us this evening from Abu Dhabi in the heart of Al Marja Island, the island of excellence, which is the Abu Dhabi Global Markets. We've been delighted to have a fantastic first show of 2023 with Simon O'Brien. It's been a very, very interesting discussion where we've touched upon firm choice, the opportunities across this incredibly interesting and well-crafted framework of regulations, which are in keeping with the model of what we've seen across the rest of the world, but nonetheless have very, very interesting and well-considered twists, some of which I have to say quite clearly come from, if I may say so, your own experience in Australia, amongst others, when it comes to extractive industries and so on. Thank you very much, John T, for that lovely comment. Thank you, Simon O'Brien, for being our guest this evening. I appreciate all of our other commenters, apart from John T. Thanks for the question. Michael Smith, and also Marcus Ward and Les Calvert. Great to see you this evening. We've got a quasi UAE Middle Eastern thing happening for the next couple of weeks. It's purely coincidental the way that came into the diary per se. We've got the former CEO of DGCX, the Dubai Gold and Commodity Exchange. He stepped down late last year. Les Mail, he's going to be discussing developing commodity exchanges, beautifully dovetailing from a lot of what we've been discussing with Simon this evening. That show's coming next week, same place, same time. My name is Patrick L. Young. I want to wish you a great week in blockchain, life and markets as always. But first of all, let me say thank you very much to our terrific guest again once more. Building the Island of Excellence in ADGM, our guest this evening, Simon O'Brien from the ADGM FSRA, and indeed our production team, Beta, Janella, Natalie, and Marianne. Great show this evening. Thanks for watching, ladies and gentlemen. See you next week.